Alright everyone, welcome back to another video. Please subscribe if you have not already. Please do that. I see when everyone subscribes, and I appreciate each and every one of you that has already subscribed, and if you're considering it too. So please do that for me. I would really appreciate it. Please subscribe. So let's get right into this video. I started back in 2020 to play the game of the Investopedia 2020 no end game, and all it is just signing up for a free investment simulator, portfolio simulator, where you can buy, sell, short, whatever you want to do in a game that mirrors the actual stock market. And I'll go through my portfolio with you and why I had invested in certain things and basically how this game works. So how this game works is you start out with $100,000 plus I think it's $50,000 in buying power past your 100,000. So you can go on margin. You can start investing when you don't necessarily have the funds to cover it. So what you can do is you can invest in individual securities, equities, stocks, whatever you want to call them, and you can see what a portfolio would do at the exact same time that the stock market is, like how the exact stock market is doing as well. So you can paper trade. This is a paper trading account. It's not real. There's no real $100,000 on the line. Anytime you buy, sell, trade, hold, whatever, you do not actually have any money on the line. So this is all, mirroring the stock market. So you can, play with fake money before you play with real money. And you can see if your investment theories or if, your philosophies actually do work. And then you can start to put them to work, maybe in a real brokerage account by trading actual dollars. So anyway, as you can see, I rank about 10,000. I don't know out of how many. I wish that it would actually tell you that in this game, but I rank number 10,000. I was as high as like 8,000 something about 2 weeks ago, and I turned $100,000 into $161,000. I've only been playing since basically November, and I've done pretty well. As you can see, the S&P 500 portfolio, or the S&P 500 itself, is actually at about a negative 0.5% for the year of 2021 so far, and my portfolio is at about 2.48%. So I am doing better than the S&P 500, and that's pretty good. I like that. I like knowing that. Here we can see the most activity and the 5 biggest gains, the 5 biggest losses. So that's really cool too. Let's get right into my portfolio. And my portfolio, as you can see, I have buying power. That's about half of what my current account value is, so I can go on margin. I have an annual return of about 319%. So I got really lucky. I started when all the hype was really going into the news about Tesla. I bought into Tesla at $441 a share, and then it has gotten as high as in the 800s lately. But as you can see, I gained about 79% in my Tesla share buying. I just went, to the wall. I bought as many shares as the account would let me with the cash that I had, and I just bought up the remainder of the account in Tesla, and that worked really well. My purchase price is, well below where it is right now, and I don't think it's going to go back to this anytime soon. So that's been my biggest gainer, definitely. But then I also got really lucky, and I bought shares of Lemonade. I have been looking and I wished that I actually bought real shares of Lemonade at this price. I was looking at it back when it was 40, when it hit 60. I told myself, well, it's at 60. I'm actually going to wait until it goes back to right around the $50 mark. So it was going to go down about 10 bucks. And as of right now, it's actually gained $100 since then. And it was actually more, again, a few weeks ago. So I actually had 193% gain on Lemonade, and I really like Lemonade as a company. It's a huge millennial play with insurance, cutting out, the big insurance companies by just you working with a bot, an AI bot that, gives you an insurance quote. And if you actually read Lemonade's business model in their S1 for their IPO when they had IPO'd back over summer 2020. They actually lose money to begin with when they initiate covering you if you're covered by renters or other types of insurances, homeowners insurance. They cover you at a loss. They're willing to lose money in order to have you as a customer because gradually over time, I think in between like year 3 and year 4 of you being on a policy, when your policy goes up, they actually start to make money and you stayed with them since then. So they're in it for the long haul, Lemonade is. So that is by far one of the best investments that I've made clearly in this paper trading account. So next I did, I did this just so I could track it myself and see buying into the Schwab, basically S&P 500. It says it's 1,000 shares, but or 1,000 stocks in the index, but I call it the Schwab S&P 500. That's just me. There's whatever. Um, it's very well diversified. But yeah, I wanted to track this to see, okay, 33.18. I really like that. And if it dips below that, then I would start to buy in my actual real money account. And, as of right now, it's at about 37. It was 38.50 recently. So it's been doing pretty well. It's up about 11%. And that's what I want to see. I want to see double digit returns. So same thing with like Microsoft. I actually do own Microsoft personally. Um, Personally, I own Tesla, this, Microsoft, Apple, um, and Copen. But yeah, I wanted to mirror, okay, if I'm going to be buying in my real money account, let me buy. So my cost basis is 207 for Microsoft, and it's up about 11%. That's what I want to see. I want to see these with, the Schwab index and this Microsoft. I want to see about double-digit growth. And right now, my Apple shares are starting to gain almost 10%. So we're crawling up into the double digits here too. Charles Schwab, this one I definitely should have bought, especially back during the early part of the pandemic when they went into the 20s for a share price. They recently hit, well over the $50 mark. I think they've gotten close to 60. So that's gained about 38% in this account. Like that's really, really good. And that's one that I wish that I had actually, again, had invested in because my theories were right and I, could have made a lot of money. Clearly could have made, 38%, but that's life. So T-Mobile is one that I'm speculating right now. I don't love it, but I do want to see where it goes. And as of right now, it's actually below my cost basis and it has reached as high as, 133 lately. So it looked, like, okay, this is actually something that I might want to really look into. And because it's a huge, 5G mobile play with involving iPhone too. I think T-Mobile is going to be the #1 network within the next 5 years, just because of how many customers they're acquiring. That's my personal opinion. So I think that this current price is going to go up and do very well versus, where I had bought it originally. But as of right now, it is down about 1%. Spotify, I don't have to tell you this, but Spotify is just such like they own like the music streaming right now. Them and Apple Music. If you listen to Spotify, you're listening to all kinds of podcasts that either they have bought out themselves or that, people are just hosting on Spotify. And Spotify is a really great company for that reason. It like blows Pandora out of the water. Remember Pandora? LOL. Yeah, who uses that anymore? Absolutely no one. Redfin is my favorite out of the Zillow and Redfin uh, stocks. Redfin is my favorite real estate online technology company. They're a platform for hosting buyers, sellers, and real estate agents. And I think that they have a lot to offer if they actually, keep going with like upkeeping their innovation. And if they keep, outsmarting Zillow, then I think that they're actually going to be a huge play one day to be just like Zillow, because Zillow is a top stock on a lot of people's radars as far as like technology goes, like the home buying process and the home selling process, and even renting. So I really like Redfin, and that actually worked out really well. This is another one again that I wish that I had um, bought at this price, and I have this basically. These are basically all like price targets for this paper account. What I've when I invested in these. So like, I'm up 24% on Redfin just off of, me comparing. You can actually see my other video too, me comparing Redfin to Zillow in a stock analysis. Um, I'll skip Callaway. I want to go to that one last, and I want to actually talk about Copen Corp. So they actually make it's a very very small cap company. I think that they have like $40 million in revenue a year. That's pennies to most of the companies on an index that you can buy. So Copen Corp basically makes like screens for cars and other stuff. It's like a tablet for your car. Like if your car has like a touch screen or something like that, I think that they make those tablets and those touch screens, and they, are a huge like technology play. They're actually right down the road. Their headquarters is right down the road from where I live, and I just recently found out that you could buy their stock. So there's a lot of speculative information about this. This one goes up and down like crazy lately. It was up like 15% every day, and then it was down 15% like every day. So it has averaged, I think, like the 50 or 200-day moving average is like $2. So obviously it just has been like skyrocketing, and it's actually lost me 16% because I speculated too much when it got really high at basically its highest in a long time, and it fell back down almost $1, um, a little bit over $1. So that is, where I get like, okay, this is something I would never just jump into in my own personal investment account, but feel free to trade as many uh, paper shares as I can. Last but not least, this is actually the one that I wish that I actually had invested in the most, other than Lemonade on this entire list, like personally. Um, it had reached close to $30 and it has come down a little bit, but I'm still up 18% on Callaway Golf. Why Callaway Golf? All I do is make clubs, golf balls, hats, like, golfing polos. Why are they so special? Why do you want to invest in them? Well, because they actually bought Top Golf Entertainment, which is huge, for like $1.1 billion or something like that. Except Top Golf was expected to do $1 billion in revenue in like within like the next 4 or 5 years. And as of right now, Callaway itself does about 2 billion in revenue. So you're looking at, a huge increase in revenue from this Top Golf acquisition that Callaway should be worth way more than even this. Like I said, it actually hit $30 recently. So I was looking at it back when it was about 19, $20, and then I finally said, let me try this in the paper trading account, with investing at 23.61, and sure enough, I've gained 18%. It has worked out, and I really do wish that this, again, like I said, Lemonade and this are the ones that I wish I invested in the most, because this is so affordable for someone that's young like me. Like I can buy a few shares of Callaway Golf if I really want to. And I could see something like an 18% return just because, my looking into it, my opinion, my speculation is that it's going to be worth way more in the future because they acquired Top Golf Entertainment back in October 2020. So anyway, hope you guys enjoyed this. It's about, almost a 15-minute video, but it is super full of information. This is a really fun trading platform to, just play around in and see what kinds of trades you can make, and should you actually go ahead and maybe do it in real life too. It's a great way to learn. Um, so I really do hope that you guys enjoyed this and consider subscribing, and yeah, let me know what you think. Thanks.